Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's more fun today. It's Tuesday, and the word is starting to really get out that Jackson Hole now is going to be a cyber Zoom event. So people are thinking that they're actually going to say less. That's in other words, it won't be the Jackson Hole that normally has a lot of insider games going on and a lot of little secrets here and there, and it has an effect. They're really thinking now that the September meeting of the Federal Reserve will kind of provide way more insight than what normally Jackson Hole would do. Jackson Hole usually does, but if they're all going to be sitting in their offices or sitting in their hotel rooms, zooming back and forth to each other, then obviously it's not the event that it normally is. It's the Davos of the United States that occurs, basically. So, anyhow, there it is. There's the Swiss this morning. Let's see it on J4. Oh, you can see it on Chicago Quant at this point. Let's see, where's that at? Right there. You can see that it went into a sell yesterday, right there, and it's just pressing down. It's in a weekly sell now for a couple weeks. What is that exactly? 21, right? So it's 5 full weeks now in a weekly sell. So it's going on the 6th week as we speak. Right there. Where's it? There it is. There's 1, 2, 3, 4, 5. Yep, the 6th week. It's been a real choppy ride. It hasn't been very coherent, which is classic for this time of the year. So no surprises there. Over here on the J4X, same situation. See the pressure on the dailies looking the same way, riding up and down. We got a couple reds, got a couple reds there. We got 3 greens here, we got 3 greens there. 3 reds there, we got 3 reds there. So it matches up very well. You can see the lines turning down here, pushing into the sell. You can see the same thing going on right there. And it's just 3 or 4 hours behind, that's all. All right, that is the flow of the dollar against the Swiss, and more than likely that's the way the rest of the pairs are functioning on the same level. So we'll take a look at the euro. Right there. And there's the euro this morning. You can see it's been trying to perk up. It's been actually showing some strength. It's been interesting to see it act much stronger than it normally has. When it's a free market floating currency. It has a lot of economics behind it. There's got to be some industrial base there in Europe anymore. You would expect that on some level. Heck of a lot more in many ways than anywhere else in the world. And so you would expect this product to have a good currency. In other words, you would expect the euro to be a good currency. We've always hoped that it would take off a lot of pressure for us. Unfortunately, the quantitative easing is a manifestation of the destruction of the financial markets back in 2008. And obviously you don't usually hear anybody talk about it that way, but that's exactly what it is. And when you put an economist in front of you and you say something like that, they just shake their head, yes. It was a destruction of the financial system in 2008. And it's basically functioning on a very simplistic level now. It's all central bank controlled, 100%. It always was on some level, but not like this every day. It used to be every quarter of a year. They would lower their rates, they would raise their rates, they would add money into the system overnight, or take some out. But now we're at a whole different dynamic. Hey Douglas, how you doing? Good Tuesday to you. So that is where we are. We're going through we just did 2 products. So we just did the Swiss, and now we're doing the euro. And you can see that the dollar is weakening, because you can see just this upwardly strength here, right there. And you can see the daily went into the daily buy yesterday. You can see the weekly's showing some real life in it. Oh, you can't see that, can you? Here, let's do that again. You can see the weekly is starting to show some real life in it. We've been in a weekly sell since back here, which is that 11 weeks ago? 10 weeks ago? 11 weeks ago, there it is. So it started 11 weeks ago in a sell. And so, geez, it doesn't look like 11 weeks, does it? But it is. There it is. It's a dead summer in many ways. So, it doesn't seem to be, it's not exploding. It's lifting up. Looks like it's trying to. It's actually almost bounced off that little channel that we've been watching for a couple of years now, or a year and a half, or something like that. And so, it didn't touch it, but it's flirting with it now as we speak. In the sense of it's bounced way off of its lows from it. So there's definitely some buying of the euro, selling of the dollar. It'll be interesting because Jackson Hole has been the American Davos for a long time, and not many people know that Jackson Hole County in Wyoming is the richest county in America. So talk about migrating to somewhere elitist, I guess you could call it. It's funny how they do all these things. But anyway, that's the euro. You can see the strength in it. You can see, maybe we should make these lines thicker. Like that. And maybe we should make them white instead of red. Like that. It'll emphasize it more. And then there's the top end of the range. And we'll see how that plays itself out. And then when we go back and look, the way it's ridden that range for a while, there's February. So this is all this year. That's last year, and that's you see how it bounces off of it all the way back to August in July of last year. So it's been one full year of playing with that range where it goes, bounces off of it, goes up to it, falls down from it, bounces off of it. In this case here, it missed that, and then you can see here, it fails to really trade through it more than just just a mild action. Now you can see the same thing here, coming down to it and starting to firm up again. Middle age. Oh, what's the? Let's take a look at that. There's the UUP. It's down a little bit today. Not much. Looks like it's almost upped. You see the quant is moving down like that. You can see the same thing here with the weekly. The weekly's still in a buy, which is interesting. Now, is that right on the sheet? I thought it went into the sell last week. Let's see. Where's that at? That is line. No, it's still in the buy. That's line 25. So So this is 3 full weeks in a buy on a 4th as we speak, right there. I really don't see the currencies going anywhere particular. I just think they stay in their ranges. That's pretty much the way it's been for over a year now. They like to stay inside their ranges, and that's because the central banks want them to stay inside their ranges. So when you have such a large buyer and seller that can, has extremely deep pockets. We've never seen this depth of equity to go into the marketplace. Just enormous amounts of money. Well, we lost enormous amounts of companies, especially in the financial industry. The financial industry was devastated. I mean, Bear Stearns, Merrill Lynch, Wachovia, which was a conglomeration of some of the top banks in the United States, slowly merging into one. It was maybe Wachovia might have been the second or third largest bank in the United States at that time when it fell over. Who else? Going throughout the world like a Santander, Deutsche Bank, the Lloyd's of London. It was a devastation. Bank of Scotland. We lost a lot of major banks and brokerage houses. Lehman and who else was in there? I just mentioned Merrill Lynch. Merrill Lynch is gone. It's owned by a bank now. So I mean, they bought it the name for $7 or something like that a share. So it's the central banks are the main player now, And I know that you don't hear people talk about that much in the financial news, which you would think they would, but they've probably been told not to. I mean, that's really what it comes down to. I mean, there's a complete control, a complete fight to control the narrative constantly. In other words, don't mention what's going on. Just say, all right, everything's fine. So, all right, how was that? Now let's drift over to the Great British Pound, the GBP. Now that is flirting with a daily buy today. You can see that, and you can see the weekly is trying to climb back up. We are where are we at that minus 0.00044. So it's really close. It's trying to climb back up into the weekly buy again. It would be interesting to see that go into the weekly buy this week and see the euro go into the weekly buy. Look how close that is. Extremely close. Minus 0.00042. Very close, both of them. Love to see them climb up into the buy and, put a little strength into this market. Let's see now. What else? That's pretty much the name of the game there. Let's take a look at the Turkish Lira today. Right there. And you can see it's breaking down. It settled in a sell last night. It's the second day now. This will be the second day. Couldn't get out of its own way when it comes to the weekly, so there it is. Over on J4X, let's take a look at it there. Dollar Turk. So where the Greeks on Monday or Saturday or something like that finished off the wall so that they don't have all that illegal immigration. And there you can see, same thing with the J4X from Dukascopy, pushing down, pressure on it, just like here. Just like there. And then let's widen that out. There we are. Yeah. So it's the pressure's there, and then we go and take a look at it in the euro against the Turkish Lira, which is so much more insightful. Right there. You see it's in a second day also, and it's a couple weeks longer. Actually, a couple weeks longer than what the dollar Turkish Lira has been in when it comes to the weekly sell. I think it's 2 weeks. Let's take a look at that on the J4X. Right there. So that is what we're seeing in this marketplace, and you can see normally the Canadian dollar likes to march along with that. And Canadian last night went into a daily sell, which is a bullish thing for the Canadian. In other words, it's going down, which means costs more U.S. dollars to buy it. So that's usually the way it works. That's the story. Okay, now let's take a look at that. Let's see, where is it at? Right there, it's goody. Put the Canadian up there. Right there. And then find it over here. There we are, and you can see that the pressure is on. The pressure is on. And that is what it is. And you can see there, Canadian pressing down. It's been in a weekly buy for a bunch of weeks. What is that? That's line 20. So 11 weeks in a buy. We'll see how well that keeps on pressing down also at the same time. And that's, well, we're moving along nice and fast this morning here. So that's pretty much the first set of currencies that we look at. And from there we move over into the energy market. Where is that? Right here. And we're having problems with the gold market. I need to reload that whole system. It's still in a daily buy, but the chart's all screwed up. Let's see, and let's move this over like so. And there it is. You see there. Oil is moving up, and Canadian is moving down, which is a healthy, normal thing for those two products, you know. That is the healthy thing. All right. Usually, you know, because of the size of the country and the amount of resources it has, this is Canada. You know, they are a very strong oil producer. I think they can get up to over 3+ million barrels a day for a population in the, I think it's under 50 million. That's a lot of oil returned. And at the same time, they are always in the top 2 or 3 when it comes to producing gold and silver. So they have a lot of natural resources there. All right. Douglas says no tapering yet, Doc. You know they remember during the Obama years, you know, from 2008 all the way up to the beginning of 2009, after the whole calamity, it all happened as he was getting elected. It was really a disaster. I guess the markets in some way, you know, just knew that it was ugly. I don't know, but in the end result is that you know, they talked about. Remember, interest rates stayed, I think, just at 0.25% for a long while, or 0.5%, something like that. Our Treasury bills went minus for a little while, off and on. So, you know, they promised for 8 years they were going to raise rates, and for 8 years they didn't, and everybody just kind of laughed and said, "Oh well, that's okay, not this week, you know, or not this quarter, next quarter." You know, no one ever suggested it was political whatsoever. But then, you know, as soon as Trump got elected, they raised the rates. He didn't even get it sworn into office, and they started raising rates on him. He was not happy about that because he's a real estate guy. They love low rates. And so tapering right now with Joe Biden in office, it's going to be just like the O'Biden years, you know? That's what they're referring to it over here nowadays. The O'Biden, like Obama and Biden. You know, they're calling it the O'Biden years now. And the chances of us seeing a taper, you know, I don't think we're going to see a taper for, let's put it this way, we won't actually, they keep on claiming, okay, here we go. I can tell you some news that is known in the financial community. The media just doesn't talk about it. They supposedly are not buying as much of mortgage bonds and, supposedly the corporate bond portfolio owned by the Federal Reserve is supposedly very small now. They've been selling them back out because the demand is so high for it. And so when they sell it out, it helps to keep the interest rates, I guess, stable because everybody's so hungry to have something. So the Federal Reserve has thinned enormously, supposedly like 80 or 90%. 80 or 90, that big. They've sold off the corporate bonds that they've been buying. Now, they're out there buying up all the mortgage bonds still. And they spend $120 billion a month on buying bonds overall. Then, that's new bonds. Bonds they don't own. Then they roll the old bonds. So in other words, let's say their portfolio has 90-day or even just 2-year. At this point, they could have 10 years in there, and they mature. In other words, this has been going on since 2008. So late 2008, this time of 2008, it started the collapse in October or September. And then as the election came on, it just rolled right over and crushed the markets. But they could have, a 10-year means that the 10-year matured in 2018. So they have a lot of bonds that they own that are maturing now. From 10-year, 9-year, 5-year, 2-year, they've been rolling them. And so what they do is when they mature, they don't count that as buying bonds. So in other words, they have, let's say they have a portfolio of 40 billion that are going to mature this month. Okay, they roll them into the next 5 years of whatever it is. If it's a 10-year bond, they'll roll it into whatever's the next 10. Now that doesn't count for the 120 billion they're spending each month. That's separate. Okay, so I could say, in all honesty, they have stopped buying, and they've sold almost their whole portfolio in corporate bonds. And so the only thing they're really buying now is mortgage-backed and government-backed bonds. And who knows which government. I mean, I'm sure they're buying our government. I'm sure they're buying, the Greek government at times. I'm sure they're buying, New Zealand's government. Who knows which ones they're buying. But they're buying them. And so that's where we are. So the chances of it, what you would think a tapering should look like, is not exactly what it does look like. So in other words, they have stopped on some level. And in the same token, they're still rolling existing positions and buying new bonds. So it's a very, it's a very, I don't want to call it hidden. Well, if the media doesn't really talk about it. So over here in the States, you wouldn't even know that quantitative easing is still going on as far as they're concerned. They'll mention it once in a while like it's a passing thing, like, nothing to see here. It's just noise in the background. Don't worry. But yeah, they're when it comes to tapering, they are doing different ways of tapering. They're like now they put the corporates out there. They've got all snapped up by the institutions, and so their portfolio has shrunk a little bit there because of that. But at the same token, you have no idea what they're buying and what they're holding. In other words, they won't allow an audit. We know they own Deutsche Bank bonds, and we know they own Citi Bank bonds, and we know they own Lloyd's of London bonds. They were the buyer of last resort. They stepped up and helped when no one could do anything. So that was Mr. Bernanke's whole PhD thesis. I know some people may think when I say that here that I'm making a joke, but no, that was what his PhD thesis was in economics. It was, what did they do wrong in the Great Depression? How could have they done it better? That was pretty much his thesis. And, it made sense what he was suggesting. The thing is that when he suggested it at the time, he said, we'll just do this for a little while. And then when he was doing testimony towards the end of his years, 4 or 6 years later, he was doing testimony in Congress. He came out and said stuff like, I'll never see a 3% or 3.5% 30-year in my lifetime. I remember him saying that. And, or maybe it was a 10-year. I think it might have been a 10-year even. He said, I'll never see that in my lifetime. And he meant it. And I know that's an odd statement, but it's a rational statement when you know that the Federal Reserve is flying or functioning on his PhD thesis, how to deal with a depression or potential depression. So that's where we are. All right, where are we looking up on the screen here? Oh, the Canadian. Yeah, Canadians. Oh no, it's crude. That's what it is. Crude is lifting up. Now let me show you the screw up that's going on in gold. They've messed up the data in here. I got a box in there saying it's corrupt and it's in a buy. But the lines are all screwy. The sell was right on Friday. On Monday morning, everything was fine. We were in a buy with no problem. And obviously, we were even higher. But they removed a lot of data. The highs and the lows and the opens and the closes and so forth. They're all screwed up. So I'm going to try to delete this data during the trading day here, and then go and then go from there and reload it again. Maybe that'll straighten it out, because right now it's torturing me enormously. All right, and from there we're going to drift back to the other currencies. Let's go over to the South African Rand right there, and right there. peso. Where is that ZAR? There it is, right there. Now that's doing what it should be doing because gold is, up today, and this is moving down, and that's what it should be doing. Also, we can, I know that silver is up. We'll take a look at that when we go back to the commodity complex. And then we take a look at the ruble. You see there, ruble's trying to slip back into the sell, so that, it's obviously the dollar is weakening across the planet. They do that. You see that all the pairs seem to join in together. It's love the dollar or dislike the dollar, one or the other, and they all like to do it. And then it's like an engine. Who's going to do it better than the next one? Who's in more demand? Who has more buying at the moment? That type of thing. And then we drift over to the Japanese yen right there. You can see that is pressing down. It's the second day in a sell. You can see we're 4 weeks. This is the 5th week in a sell. Hasn't really gone anywhere. It's got that classic summer sideways, I don't care type of attitude. Then the last of our products that we're looking at is the Mexican peso, right there. And it has had a nice little run up on the buy. Second best to this last move right here. This buy was shallower, and this buy was a little bit more shallower. But this one we thought might have a lot more guts because of the speed, the way this thing moved up on the weekly. A little surprised how fast this is dropping again, too. They don't seem to be able to keep the action in there. But then when you really look at it, when we tighten it up, it's been pretty sideways and pretty conservative. This big spike is the 21.5 area. The lows have been just underneath the 20, 19 and 80s or 1990s. What does that say? 1973 with a 1959 low. It hasn't really been thrown around like the way we see the Turkish Lira getting knocked around. So it's been locked in like a 1.5 range for a while. You can see there, pretty much the same situation since Mr. Biden came in. It's picked up value against the dollar since Mr. Biden got elected, or at least captured the presidency on whatever way you want to define it. So that's the 4 currencies. Anybody want to see any other currency? Just shout it out. We'll find it for you. Now let's take a look at. No, not that. Let's do this. Let's go over to the metals complex now. Take a look and see what they're doing with that. And see, I've explained the gold situation. So now let's go check out silver right there. You can see silver is holding up very well. This chart is showing correct. You can see that the market's opened down on Monday and then lifted up. That's how gold was too. Why they pulled all that data out, I have no idea. And then you can see the weekly is still in the sell right there. You see that? It's trying, trying to perk its head up. It would be interesting to see it in daily, weekly buy, just the way gold is now. And then we go take a look at copper. Right there. Copper is climbing up. It's on its 3rd day now. But look at the weekly. It's still pressing down. So they can't seem to convince the metals complex to really reach for it yet. We'll see how that goes. If it's and it could be a lot of different characteristics in a thin summer market. This is where our math is always giving us that 1.5. I can literally tell you the periods where it happens. It happens between usually the 3rd week of July all the way out to like the 3rd week of August. It's like that period is so dead that it messes with my math. And then it occurs again out in late November after Thanksgiving. It tries to do that stuff the week before, and then it goes in and out throughout December because of the holiday, and then we're pretty much healthier again. But this is the worst time of the year, this one right here. This is always, every year for decades, it's always been this sloppy because there's no volume, there's no action. A lot of people are trying to enjoy the summer months, and they so every people are standing to the side. They start to make it September business or late August business, that type of thing. We refer to it in the hedge fund industry as business, things that we need to do, that we have business to do. In other words, buy, rotate, that type of stuff on the stock side. Alrighty, okay, where do we go from here? Let's see, what we should check out is natural gas. I thought natural gas is kind of interesting. It slipped into the buy there yesterday. And let's see, let's put it up on the screen. Natty gas. There it is. Right there. Now they're pressing it down at the moment. You can see we went into a buy yesterday, and they took it up, and then now they are taking it down. Let's give it a refresh to see what it looks like. There it is. Yep, they got it back into the sell. It closed in the weekly sell on Friday, and I was impressed when I saw it trying to perk up. I thought, wow, that's interesting. They're starting to step up for the stuff, But then this might be we just may have seen the B. This right here, might be the A, and this is the B, and then I might do a C and challenge these highs here, and then the winter, they'll start to anticipate what they'll look and see what the temperatures are going to be like, and then I'll start to put pressure on the product, be it up or down. More than likely, I would imagine we're going to have I know that a lot of people think things are getting warmer, but they're not. If you look at the NASA data from NASA, not the NASA data that's fudged by the global people groups, those green groups, they fudge it. They wipe out the cold. But overall, the last decade has been colder, not warmer. They just like to emphasize that it's warmer. It's really funny. Then you go and look at the same NASA charts from NASA, and it's like, wait a minute, how come the global people, the green people, are not showing us these maps? They keep on watering them down. They show the maps, but they cut out, they wash out the cold across the planet, so they can say, oh, things are getting warmer, but they're not. And this is a NASA map. It is a NASA map, but they've changed it. They've altered it. So if you look at the NASA map, watch it from NASA. Don't watch it from a third party, and then you're going to see that the world has been getting colder. And so I would have to assume that we'll see some pretty cold weather this year, and that should put even more pressure on the natural gas. Isn't that something? Crazy stuff. There we are. Middle Age says, how about platinum? Yeah, let's check out the platinum. I've actually seen some strength in it lately. And there's that palladium too underneath it. But there's you can see that. Actually, what are they saying? They're saying it's down now, right? Let me just give it a refresh. There we are. Let's widen that out. But it's actually down for the day. Whereas even with a bad chart in gold, the gold is still up. You can see it's green. It's supposedly settled in the 7s. It's up about $4. But when it comes to platinum, platinum is down for the day, right there. And half decent down, I guess. Closed at allegedly, what's that, 14.1, and it's traded down to basically 0.2, so around $12. And right now, it's down about $8. And then here's the palladium, right there. Wait, I sold that down to the almost the 2200 area. Remember when everybody was getting psyched it was going to go to 32? We've been in a sell since then, since up in here. I've been telling you that 32 is going to be very hard when we're in a weekly sell. And unless they screwed the data up, one or the other. So it's been in the sell for 2, 4, 6, 8, 10, 12, 14. This is the 15th week in a weekly sell, but we get a nice bounce out of it. Took a little work for it, didn't it? Let's line that out a little bit. You can see that. You know, went into the sell here. Nice winner chicken dinner. Then it went into the buy here. It didn't go into the buy. See this? It hadn't turned up. So jumped up from 2,260 to $2,400, and now it's climbing into the buy today. That's where it is. That's the palladium. So that's almost like a $1,000 drop. So 1,000, yeah, I guess like 3,200. Did it get to 3,200? Let's see what was the high in this thing. No, 3,000. I think everybody was looking for it to go to 32. So it's dropped $800, $740, I guess you could say to be exact. So there's the metals complex. And again, I don't expect to see any tapering, especially now that Jackson Hole's been kind of, I guess you could say, shelved, you know, put to the side for the moment. They'll zoom some interesting stuff. They'll put out some great stats. There'll be some chat here and there. Who knows? Someone might say something interesting out of it all. And then, more than likely, next month at the live news conference or the Fed meeting, maybe that'll take up the issues, you know? Maybe that'll do it. That's what it seems. That seems to be the recipe out of it all. The American Davos has been shelved. What did they? I'm trying to remember what they did for Davos. I think they, well, the left, you know, they never pay attention to things. So they, I don't know if they were wearing masks or not wearing masks or not caring or who knows. They keep on showing all these Democrats partying all the time and getting together with people, but at the same time they keep on threatening people they need to wear masks, but they don't wear masks. So I'm a little confused what that's all about. I mean, I guess it's to satisfy some project they're involved in. All right, where are we at now? I guess that's about it there when it comes to the metals and oils and energies. Let's jump over to, where do we go from here? Let's go to the stock indices. Let's do stock indices. Let's give you a quick flavor of where they are right now. There it comes. Right there, there it is. So this one right here is the S&P 500. Let's give that a little refresh so you can see it. There it is. And you can see obviously it's going up in value and it's up $6. This one in the middle is the Tech 100. It's a bar chart of one Tesla, as I like to call it. We'll give that a refresh. Same situation. You can see it's been very firm now for the last hour or so. Then here is the grand lady of them all, and that is the Dow Jones Industrial Average. Obviously they sold it down, and then they picked it back up again. Let's make each one of these bigger too. So there's that. You know, the U.S. closed right here last night. Asia took it up. Europe sold it down. It's like the reverse game going on now. Then the Tech 100. Kind of the same thing. Let's move that over a little bit so you can see it. But it was down. There's the New York close in this area here. Asia takes it up. Here's the opening in Frankfurt and London and so forth. European Open, I guess you could say, and then you can see they sell it down. And it just has that, you know, it's like a 5-wave. 1, 2, 3, the bulk of the move right here. There's 4. And maybe it'll sell it back down and make new lows. All right. And then last but not least, the S&P 500, 2 Teslas. And let's tighten that up a little bit so you can see. Again, this is the U.S. close right here. and the Asian markets lifted it up, and now the European markets, which is right around here, sold it down. Let's see, Middle Age says, I told a lot of stock market bears on a blog that they need to tune into the webinar so they can save their self some money. I hear you. Well, I imagine people are tuning in, but I guess I'm like I don't know, I talk, like you middle age, and a lot of yous here have heard me talk for months and years. But somebody newbie tuning in has to have the patience to watch for a while, because I kind of speak Martian, I guess, to some extent, I mean, we have a fact-check spreadsheet, and we talk about things that are not talked about in mainstream finance anymore. I mean, they will once in a while say it, but it's funny how the talking heads just kind of like listen, smile, and then they just say thank you, and then they never really further the conversation. So I'd imagine, thank you for doing that. I'd imagine, though, is that people, probably new people find me kind of odd to begin with, talking about markets like as if they're easy peasy candy, And I imagine that has to be very weird to a lot of people. They've been short for 3 months. Well, if they've been short 3 months, there's no doubt. I even bought something to be short, but it hasn't lost much money. But it's just only 2% of my portfolio, because it's like buying a put, It's that FANG ETF that will go up in value when the FANGs go down. And I mean, they ran it up from $2.50. It's cheap. It's like an option, but it's an ETF, and they ran it from there up to almost $3 over the last 4 or 5 days. So, and now it's back down around $2.55 or something like that. But to be actually short, where you can get your head handed to you, is crazy, because as long as there's no real QE going on, they are going to find ways to make new highs. Now, we're coming into that classic September, October, scary period. And, weakness is abiding because, people are trying to take profits. Fund managers make money, and they got to try to keep that money so they can get paid on that money. Remember, they get 1 or 2% of the whole portfolio fee. And then they're getting, 20% of the profits. So that alone forces companies and, hedge funds and mutual funds and so forth that are getting paid that way to lighten up their portfolio this time of the year, especially going into October, November, because they want to get a big paycheck in January. So that's what's going on soon. Now, in a world where interest rates are pretty much zero, you have to assume that it's going to be choppy more than it is going to be down. We'll see. But I would assume that. That's what I'm thinking. Also, Mr. Powell, the Fed chair, the nomination is in February. I have a hard time believing he's going to change any characteristic of what he's doing. Because I think he wants that job again. And I'm convinced that they're going to give it the blinder. If Mr. Biden hadn't fallen apart the way he fell apart just recently, and recently I mean the last 6 months in front of everybody's face, pretty much, they're seriously talking about the 25th Amendment, about removing him, because they think that he's kind of like lost it mentally. And so, I think. One thing I do think is going to happen is we're going to go through a small era here where we lose presidents and vice presidents. It's going to be I think that somehow or another things are going to change, especially if he doesn't get that $3.5 trillion thing he wants to spend money on. If he doesn't get that passed, I would imagine that he could be going out the door faster than most people realize. Remember, a lot of his cabinet say they actually compete with him verbally sometimes. In other words, he'll say something in a news conference, and then they refer to it as walking it back. Then, literally after the news conference is over with, they will actually, come out, make press statements saying, no, that was not accurate. He was not informed, but it's not the way he said it is. I mean, they do that all the time to him. Luckily, they control 90% of the media. I mean, the vice chairman of the Democrat Party is chairman of Comcast and so forth. CNBC and all, NBC, the whole bit. So, they can pretty much clean things up for him. He's really having a hard time cleaning up the Afghanistan and the border mess, because they're really hard to clean up because he has to work to do it. So instead, they just keep on ignoring it because the media is, the U.S. media is not really covering it like the world is seeing, and I mean, it's like as if it's actually happening. So that's a real odd, curious thing here. Is you think that you're going, what are the Americans thinking? How come they're not up in arms? Because they're not reporting it. It's very easy. Just don't report it. It's like Pravda, All right. So that is the stock indices on a very short-term intraday basis, which you can see are all plus. The Tech 100 right there up 29, and the Dow Jones Industrial Average up 51, and the S&P 500 up 6.5. Now let's take a look at them in the fashion of the daily, and we can take a look at them how they act the same way in the J4X too at the same time. So we're going to go we'll go from the start and go to the S&P 500, the grand lady of them all. One of the grand ladies. Let's see, where is it at? Right there. So there's the S&P 500 daily chart on J4X. And you can see it's been popping up very firmly last couple days. And you can see on our fact check spreadsheet we're 2 days in a buy now. This is the third day. So that's line 26 on the fact check spreadsheet. For those wondering what a fact check spreadsheet is, that's the Excel spreadsheet you see right here. And what it is that we tell you how many weeks something's been in a sell or how much has been in a buy in our mathematical form. And same thing with dailies. That's how middle age can tell you in a blog, don't be short. In other words, you can see right there, the S&P has been in a weekly buy now for 9 weeks, and the NASDAQ 100, 11 weeks. So you're getting your head handed to you because you're just fighting the trend, that's all. I mean, it makes sense. You would think you would want to sell the thing. I want to sell the thing all the time. But it doesn't work that way. When you have quantitative easing, they just can walk right over you. Now, let's take a look at the S&P 500 right there. You can see we went into the weekly buy back in here in the 4,180 area, something like that, 175 area, close of 74. And we've been in a buy ever since. Each week reconfirms it, and it stays in it as long as this green line or the histogram is above this 0 line here. This is a GAS 5. So they both will go plus or minus. It's only one standard deviation or two standard deviations of our math that makes one different from the other. And so they'll both be plus or they'll both be minus, and that means it's in a weekly buy. Then the daily chart here, that's a daily buy, and it's a daily buy for this move here, and then it goes into a sell there. You see that goes there, and you can see it goes into a buy there, and then it goes into a sell here, which goes nowhere. It goes into a buy here. It does that long run until it goes into the sell right there. It goes back into the buy for these 3 days, and it goes into a sell here. It just goes down a couple days, and now it's been in a buy since right here. So that's how you read our charts. And and you can ask any question. Don't be afraid to ask questions. I'll answer any question. I don't think any question is stupid or dumb. I find questions to be enlightening most of the time, if not all the time. The only difference is there might be a short answer to it or a long answer. That's about it. But I love it when some people go and ask a question, and they do. They say, what do you think about this? Or you don't even have to say, what do you think? You just have to say, gold. Just write gold on there, or S&P, or Dow. Just put it on there, and we'll go check it out. Yeah, and I guess, middle age, you're telling them no because the NASDAQ 100, the NQs have been in a weekly buy for 11 weeks, going on a 12th week. So there's 3 months right there. And the S&Ps are basically the same. They're like 9 or 10 weeks. So yeah, we've been in a buy side of it for a while. All right. Let's see. Where do we go from here? Let's go check out. Oh wait, what is this? Douglas says, Doc, do you have what is that? Above SPA from Brazil or Chicago Quant? Do I have? What is that the ETF? The IBOV? I know I can get the ETF. Let's go over there and hunt that down for you. I've talked about that before. We used to use that. Matter of fact, what's is really weird is when you Google the Brazilian real, they tell you to go look at the ETF, which is really strange. So let's go find it. Where do we go? Let's go to here. Right there. Open workspace. Stock. Right there. Okay, yeah, I know we had it at one time, and people were watching it for a little while. We had some clients actually watching it for a while. Let's go put it up there again. Right there, stock combination. Let's move the apple. I'm going to make a copy of it and then send it down further. There we are. Now let's put it right there. And let me see if I can find the symbol on that. I know I can find the symbol on it. Let me go hunt it down. Because we had it in there, and once I find the symbol, it's probably still in the system. Copy. There it is. EWZ. I know we have it too. Let me do this. It's right there, right? Yeah. So let's remove that. EWZ. I think it's still in the system. I don't think I delete it. EWZ. I did. I deleted it? It's so hard to believe. Okay. All right, let's add it. EWZ. There it is right there. There you go. So it's been in a cell since, let's see if we can tighten this up a little bit for you to begin with. We're going to take that one and just put, that's the cell right there. So that week it went into the cell right in here. And let's see what the buy is. Let's move some of these over. There's a buy right there. There is a sell right. Let's move that out of the way. Move that over like that. The sell was right there. That was a heck of a beat up that day. They beat that thing hard. And then let's move this over and move that in like so. There's your buy right there. But it just missed going into a weekly buy by the hair of its chin. See, minus 0.01. And let's see. I guess we can take this and push that. That's the cell right there. Then you can move that cell over. So we went into the cell here. That was a nice winner chicken dinner. And let's see. Let's grab this buy. We can make one. So there's the buy right there. And what is that? That's a buy right there. So it goes into a cell right there again. And then it goes the buy right there, and it goes into the sell right there. And then there's your buy. There's a buy. There's the sell. And let's see. There's a sell. Okay, so that's how it's played. And then you can see going back, you know, it was in a buy a long while actually. Where did it go into the buy? Went into the buy. Did one of those in and outs. So it went into the buy, then went into the sell, and then it went into a buy here. And then it just worked to keep on climbing. I guess, you know, you can say that was the buy there, and then it went into a sell there. One more over. Went into a sell there, and then went back into the buy there. And then it went into the sell. It's a very consistent product, that's for sure. Right there, it went into the sell again. And let's check the chat line. I just got lost in that. There we go. Let's see. There we go. So that's the action to it. That's been, you know, pretty good action, this product. And let's just put the symbol in there so we know what it is. EWZ. Shift Z. There we are. And we're going to save that. You can see it's up today. There we go. All right, this is pretty cool. How's that? All right, this is Doc from North America. We will catch you all tomorrow. Tomorrow will be Happy Hump Day. So happy trails to you until we meet again. Happy trails to you. To all our trading friends, thank you guys and gals. Ta-ta for now.